What is going on, SoFi investors? Jay here. Obviously, today did not work out the way we wanted to, but the earnings were really good. So I want to go over the investor presentation, talk about my initial thoughts on everything. I'm going to dig a little bit deeper as the week goes on, but I want to go over the presentation with you guys, show you the stuff that I really like, where some of my predictions landed. If you look on the screen, SoFi's trading around $7 right now, down from about $8 when the day started. It seems like there's a lot of people trading this stock. So we saw that huge run up on Friday, and that was a lot of these people just trying to make a quick buck. So the people that left today are the people that bought on Thursday and Friday. So everything's going to be fine. I promise you guys, we might see a little bit decrease in price over the next couple weeks, but I think like 650 is the floor in my opinion. Let's get into this investor presentation. Before we kick this video guys off, if you could do me a huge favor, hit that like button, subscribe to the channel. We only need 17 more subscribers until we hit 700. I've been going hard on this channel the last 2 months, and the support you guys have shown me has been remarkable. I really appreciate each and every one of you. All right, let's get into it. I'm not super active on social media, but I went on Twitter this morning just to see what people are saying about SoFi, and we have this absolute dipshit saying ridiculous things that made me laugh hysterically. They're only guiding for 17% growth, a sharp decline from 30% over the past few years. Yo, dude, we're not going to grow at 30 or 40, 50% every year for the next 100 years. That's not how business works. Stop saying stupid shit. And then that 30% is recorded, right? 17% is only what they're guiding for, and they always lowball guidance. So if they guide at 17% and they do 20 to 25%, it's really not that sharp of a difference. Especially in this environment when Anthony Noto is clearly saying we want to be a little more responsible with our lending and giving out of loans, right? This is the responsible thing to do. Sure, he could go willy-nilly and just like blast loans throughout the door. And then you're in a situation where like, oh my God, no one's paying back these loans and you're screwed. You want a CEO who's responsible, not just like, let's go to the moon. Let's do things that are short-sighted. Dude, shut up. He said an even dumber thing afterwards. Deposits are only $3 billion with 8 million members. You should expect more than $1 billion a month. Hey dude, remember that thing called inflation? Remember that? People don't have a ton of money to be saving. And SoFi broke their own record for most deposits in a quarter with over $3 billion. Stop saying stupid stuff. That's why I hate social media, because these idiots just get to say whatever the hell they want without getting punched in the face. All right, everyone, now that my little Twitter rant is over, let's get into what's really important, the Q1 2024 summary of results from SoFi. Let's do it. They kick off this earning presentation with members, up 44% year over year. We just crossed over 8 million members. We added 622,000 new members in Q1, and we seem to be at 500 to 600,000 every single quarter for the last year. And check this out. This is just my notes I took on some of this investor presentation. And if you look right here, Q2 we're going to hit 8.7 mil. Q3 will hit 9.6 mil. And then at this rate of adding 600,000, we could even add more. We're going to cross 10 million members in SoFi in Q4 this year, which is pretty cool, man. And if you look, the last 1, 2, 3, 4, 5 quarters in a row, we're in that 44 to 47% range, and it seems to be the floor, right? We're adding about 44% quarter after quarter on average. So between 550 and probably almost 700,000 we're going to do over the next few quarters. Those numbers are great. Now we just got to make sure that this new member additions translate into more money on the bottom line for SoFi. Next up on the investor presentation is products. The new product additions of almost 1 million in Q1 brings the total to 11.8 million, 38% year over year growth. And this, of course, in the early parts of a company, we're going to see these big numbers. That's what I was kind of talking about in that dude's tweet earlier, right? As a company matures, we're going to start to see quarter after quarter, these numbers come down a little bit, right? And they're stabilizing in that 40-ish% range, but it's hard to comp on the previous year when the number is ridiculously high compared to ones that were super low and easy to beat earlier in the 2020 years, right? So if we could stay in that 30 to 40% range for the long term and new product additions, I like those numbers. It's pretty strong. If you look at 2022, Q4 was a little bit higher in percentage than Q1, right? But then from Q2 to Q3, we saw a little bit of a bounce. So maybe next quarter we'll see that bounce back. I definitely think 11.8 million products is a good spot to be, up 38% year over year. It's a good solid number, guys. Everything is looking pretty good so far. Up next is Galileo accounts. Total accounts 151 million, up 20% year over year. It's not the best, right? And then the revenue from the tech platform is down a little bit from last quarter. The growth bounced back year over year pretty good if you look at Q1 2024 compared to Q1 2023, which that was comping from Q1 2022. That was up 15%. This year we're up 20%. So that's a big boost, especially if you look at the past 3 quarters. So the amount of accounts is really good. We just want to see that translate to more revenue and then more profits down the road. I want to see the tech platform and these Galileo accounts start to generate a little more revenue for SoFi as a company. I like the numbers. I'm not completely thrilled with them. They could definitely use a little bit of improvement. Next, we move on to lending and financial service products. On the left is the lending products. On the right is the financial service products. Again, a solid increase. We're going to start to see, especially on this financial service product number, the growth the first few years is not going to be that type of growth as we mature as a company, right? But we're solid from Q1 2023 to Q1 2024. We're over 40% each and every quarter, which is really good. And you got to remember, the financial service products are still up 42% year over year to 10.1 million. So as long as we can stay in the 40% range, I'm happy with that. The lending products up 20% year over year to 1.7 million. And this has been solid since 2021. The year over year growth has been over 20% every single quarter since Q1 of 2021. That's a very reliable number as we look at SoFi moving forward, right? 20% year over year growth. I could dig that moving forward. If you're expecting these numbers to be 30, 40, 50% forever, that's just not a reality. I live in the real world, and I want to evaluate this business in the real world, not some fantasy to the moon type of criteria that you're just making up and manifesting in your brain. All right, up next, guys, we're going to talk about the financial services productivity loop. And we get to see the ratios of financial services to lending products. So that's where these financial services that they're providing are actually turning into lending products where they're actually able to make some money, right? So if you look from Q1 2022 to Q1 2023 to Q1 2024, we're seeing very nice growth year after year. Very, very, very impressive numbers, guys, because we want people that are in SoFi Invest and SoFi Money and the Relay accounts and use the credit card to ultimately buy loans and other products and cross-buy on these platforms. I like these numbers, especially when you look year over year from 8,554,000 to 11,830,000. Solid numbers. I like these numbers. I'm pretty cool with that. All right, here's the quarterly performance. Adjusted net revenue of 581 million was 26% year over year growth. The adjusted EBITDA of 144 million at a 25% margin. Very solid numbers. We went down pretty considerably from Q4 2023 down to $144 million in Q1 2024. The adjusted quarterly net revenue just dipped down a little bit. They were guiding between 550 and 560 million, but we came in at 580 million, which is a pretty solid number. It'll be really interesting to see where we go next quarter. Do we bounce back again and cross over 600 million in net revenue? That's what I'm hoping for in Q2 2024. And once again, the numbers from Q1 2022, year-over-year growth comping to 2021, they were up 50%, then now in the 40s and 30s, 20s, and then we bounced back up to 34%. I think we're going to stick in that 25 to 30% range year over year. And if we can grow the revenue from 25 to 30% year over year in revenue, that makes me super happy. I can get down with that. If you look at the chart on the right, this is the quarterly adjusted EBITDA, and the EBITDA margin is definitely doing a lot better than it was a year and 2 years ago, right? 11% year over year, 16% year over year for a while, and then boom, Q4 2023, we jumped up to 30%, and then this year we came back, regressed to the mean a little bit, 25%. If we could stick in that 25% ballpark, I'm happy with that as well. I think you should be too as an investor. The next slide is the Q1 2024 non-GAAP results versus guidance. As you can see right here where the cursor is, the low guidance 550 mil, high guidance 560. They came in at 581. Low variance 31 million, high variance 21 million. So the variance to guidance is between 4 and 6%. So whatever they're guiding, they're kind of coming in better than that, around 4 to 6%. Happy medium around 5%. And the same thing with adjusted EBITDA. They came in at 144 million. Low guidance was 110. High guidance was 120. Again, the variance, this one is 3 to 5%. GAAP net income, 88 million here. The low guidance was 10 million. High guidance was 20 million, and they smashed GAAP net income this quarter. Absolutely smashed those numbers. They were guiding 20 million, came in at 88 million. Those GAAP net income results are great. So we have 2 quarters in a row of GAAP net income profitability. So that makes us one step closer to getting included in the S&P 500. Only 2 more quarters to go, and I definitely think we can achieve that. The next slide is what they're expecting in 2024 Q2, the non-GAAP guidance. Adjusted net revenue, low 555 million, high 565 million. Year-over growth 14 and 16. That is what they're guiding for. They're probably going to come in a little bit better than that, hopefully. And adjusted EBITDA, 115 mil, the high end 125, 21 and 22% respectively. They're looking at 5 million in GAAP net income, high 10 million in GAAP net income. They beat on the higher end last quarter, but that's from some one-time things. So those numbers aren't probably going to be there next quarter. So we're probably going to be looking in that $5 to $15 million range of GAAP net income, in my opinion, unless something crazy happens. All right, SoFi fam, this is the last thing I want to talk to you guys about today. That's the 2024 guidance revisions. They expect to deliver financial services net revenue growth of more than 75% versus 2023. That's remarkable growth. This financial service sector is going to be the future of this company with growth, right? We're not going to see crazy growth in the personal loans, even though home loans absolutely smashed. Tech platform net revenue growth of 20% versus 2023 levels. The lending adjustment net revenue at 92 to 95% of 2023 levels. They said that last quarter as well. So depending on macro, we're going to be 92 to 95% off of what we did last year in 2023. GAAP net income of between 165 and 175 million. The adjusted EBITDA of 590 to 600 mil. The GAAP diluted EPS, they're going to do 8 to 9 cents this year. So we'll look between 2 and 3% each and every quarter of EPS. We got the 2 cents this quarter. Great job, Anthony Noto and his team. And 800 million $1 billion of tangible book value growth, and that just allows us to make more loans. Total capital ratio of over 16% at the end of the year. Okay, here are some of my notes that I took from the earnings. This is one thing that I really, really liked and I want to show you. This is the loan origination volume was 4.37 billion, up 22% year over year. The personal loan origination was 3.2 billion, increased 11%. That's not the best number, right? It's not 20 or 30%, but when they're talking about scaling back and they're still growing at 11%, I'm happy with that. I wish it was more like 15 to 20%, but hopefully we'll get there as macro improves. And then the student loan origination jumped. I said that in my predictions. I thought student loan origination and home loans were going to increase, and they did. I didn't think it was going to jump this high, but student loan origination jumped 43% to 751.7 mil. This was the biggest surprise. Home loans more than tripled to 336 million from 89 million in the year ago quarter. They crushed it with the home loans. I think that business segment is going to continue to grow for SoFi. Let me know in the comments below. Were you happy with what SoFi guided for? Were you happy with the Q1 results? I liked them. I didn't love them. There are some aspects, obviously, with the personal loans scaling back. The business isn't, the pedal's not to the floor, but that's a good thing. When macro things get kind of crazy, interest rates are all going to be all over the place. We don't know if it's going to increase, they're going to decrease, whether they're going to stay higher for longer, which seems to be where they're at right now. It's like we're going to probably stay at this level for, probably another 6 months, maybe another 4 months. Maybe we get 1 or 2 rate decreases in 2024. We'll have to see how all that plays out. But if we start to get decreases in interest rates this year, expect SoFi to get a direct bump from that. Maybe we cross the $10 range. I think we're going to be trading in that $650 to $750 range over the next month or two as we ramp up for the Q2 earnings to be released in the next few months. All right, thanks so much for tuning in, guys. I appreciate all you guys tuning into the channel. Don't forget to like and subscribe. We'll catch you on the next video. Peace.